Hello traders, Gary Wagner here, just after 10 o'clock in Honolulu, 10:12 to be exact, 4:12 in New York. It is Wednesday, August the 10th, 2016, and this is the Daily Report for Gold and Silver. We do have a moderate rally in the precious metals markets, with gold currently trading up about 0.5% on the day, currently at 1346.43. That puts it up 0.47 or $6 in terms of the net gain. And we are, of course, looking at spot. When we turn to COMEX futures, they're up about $5.70 at 1352.40. The low on the day has been 1345 and the high 1363. We'll talk about gold in a second because we did issue a buy recommendation yesterday afternoon here in Honolulu. And finally, let's take a look at silver. Silver also trading higher, 21.15, up about 1.6% or 31 cents. The low on the day has been 1982 with a high of 2048. Let's take a look at our first chart and also talk about our current trade. So traders, yesterday afternoon, I did issue a trade alert recommending that all subscribers go long gold. Traders taking that call, we got in roughly at 1354 and change. I'm going to mark us in at 1354.90. First chart that we're looking at today is a 30-minute chart, and really what I want to kind of illustrate, these are the lows that the market hit, of course, down around 1336, and that's following this tremendous move down on Friday after a better than expected jobs report. As the market began to track back up, of course, you know that we had identified the unfolding of a pattern simply called a three-river morning star. And yesterday's trading activity actually gave us our confirming candle on a daily chart. We'll look at that in a second. And that was one of the primary factors to actually trigger the call. Now, in terms of placement itself, as I said, we got in roughly at 1354, so it's roughly in this area right here. Market continued to track straight up, trading to about a little bit over 1360, coming down a little bit, then hitting these highs coming in yesterday at 1363. But as you can see, early trade in New York did bring the market back down, settling up about $6 on the day, but about $2 shy of our entry point. Traders, in fact, this is actually the chart that I sent out to you as an attachment when we actually issued the buy signal. And it's pretty easy to see at this point, as we've talked about it over the last couple of days. As the market came down, of course, jobs report, tremendous drawdown, $25 down. This doji star indicating consolidation and potential key reversal area. That occurred, of course, a couple of days ago. And also noteworthy was the fact that the low on that candle came in at roughly 1335, which is a 61% retracement of this most recent rally from these lows here at about 1311 up to this top above 1370. Now, our recommendation was to enter long. As I said, traders taking that call got in roughly at 1354, 1355, and my recommendation also is to place stops under 1335. And that's based upon these most recent lows that came in just a few days ago. Traders, so if you recall, over the last couple of days, we've really talked about this particular pattern forming as this market came down. Of course, this would have been that long red candle, the $25 drop, this being our doji star. This was the activity we saw yesterday. In other words, the completion of the three-river morning star. And then in the afternoon trading session, we did get confirmation. Even though the market closed a couple dollars below our entry price, I still believe that we have a solid trade underway. We'll have to see, and of course time will tell, but to give you an idea of the importance that I've put to this particular pattern group, the Three River Morning Star variation, this is a chart that I did for Kitco. This is back, of course, in 2010, although it looks very, very similar when we look at price activity today. But you can see all of these occurrences that are circled here. These are all examples of a Three River Morning Star variation. So as I said, we are long the market. Market genuinely took off after we entered that trade yesterday, having a really long red candle. But as I said, coming into the marketplace today, we did in fact see gold come under a little bit of pressure, giving back some of the earlier profits that we had seen as the market was trading up about $12 on the day. Now, in terms of our exit strategy, assuming that we are correct and the market does continue to rise, what I'm really looking at is as follows. My sense is that we are still in the final part of a fifth wave up. That fifth wave is now divided into a 1 count, a 2 count, at least a 3 count. At minimum, we've got to, of course, because it is a new wave, wave 5 has got to take out the high of wave 3, which is right here. And as you know, I believe we could see this market move up. And I'm looking at, in terms of a conservative estimate, at around 1400 is what I would like to see. And I really believe that that is quite achievable. Lastly, I do want to talk about silver, and let's pull up a silver chart. So traders, we're looking at a weekly silver chart. No doubt it has been on fire as this market came up from what, 13, the high 13s, I think 13.99, roughly in that area. This is showing 13.68 as the low. And we have definitively found some resistance at that 61% retracement, which is roughly $20.75 over the last 5 weeks. Also, look at these alternating candle color, which tells us that we are truly in a consolidating market in a defined range, which is really different than what we have been seeing in gold, but we are seeing that movement back again. I should say but if we break above these particular tops here, and we're not that far off, I would recommend adding to our long gold by adding a long silver. But I would like to see it break, as I said, above this particular price point before issuing that recommendation. Maintain your current long position in gold. Maintain your current stop. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow on Thursday for another daily update and review. Bye-bye.